let's look at the Forex market, which is the most important of all financial markets. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We have a look at this pair, the Japanese yen / the Mexican peso. So here is the distance from the low and the high. So clearly, the Japanese yen has weakened substantially vis-a-vis the Mexican peso. Unfortunately, we do not get a seasonality for the currency pair. So what I have done instead to sort of give us a little bit of a hint, and that is to compare the EVV with the EVJ. So this is the Mexican stock market ETF, and here's the Japanese stock market ETF. So this is the percentage of months in which the Mexican stock market outperforms the Japanese. And you can see here that the current month April, tends to see some outperformance from Mexico. May and June, which are right around the corner, they are some of the months that are in which the Japanese stock market tends to outperform. So let's here look at the charts. So this is the big picture, and I have drawn in these gray cycle patterns. You can see that they are, there's a relatively good fit between price and the cycles. The current move in that context would be a part of this rising phase. But there are other indicators as well. One of the key indicators that popped up on my radar, that is the red 200-week moving average. So as you can see here, there's been quite a few times in which that moving average was a bit of a big deal. So we can see it here, it mattered. It also mattered here as a support. Here it is key. Here it becomes resistance. Here it becomes support. Here, the sell-off really accelerates when we break below. And if we fast forward to our current time frame, like here, then you can see that became support, tested, and now we are testing that very key moving average again. So the red 200-week moving average is quite clearly a big deal. Given that this pair tends to move in these very clear cycles, both big cycle patterns, but you can also see that in the smaller time frames there are these cycles as well. You see that it is like inhale, exhale, and then you have these smaller as well, which means that there's a high, because of that behavior of price action, there's a higher probability that a support level will actually trigger a bounce, because that is simply the typical behavior of this security. So yeah, high probability that the 200-week will at least create a bounce. Preferably for the bulls, it would become more substantial. Another key thing to look at is the RSI. So the current low level of RSI, it tends to trigger rallies. Quite a few of these recent lows where we have had some mean reversion, they have been triggered from that key level. It's over all of these years, there's only a few instances like back here and back here where you see that RSI was more deeply oversold. Now technically it wasn't oversold in being below 30, but in the context of this pair it was oversold, given that it was towards the historical low range of the pair. Okay. Correlation here with the S&P 500 is only 23% long term. Looking here at the daily data points, which gives us a lot more nuance. So because this pair moves in these big cycles and small cycles, the moving averages are just thrown all over the place. Hence, daily moving averages can be less tradable for a pair like this than weekly moving averages. Though it is important to see what's happening here. You can see that we are below many of the moving averages, so definitively the bears have been rather aggressive. We have seen a big substantial pullback here from the highs. We are towards a historical lower range on the daily RSI. Looking at the PPO, And the PPO measures the distance between price and the red 200-day moving average. And you can see that we are towards the historical low end of that range, which further would tie into a narrative that at least we would expect mean reversion. The correlation here with the S&P 500 short term is minus 88%. Okay. It is important to be aware that when you look at this pair long term, going all the way back here to the 90s, the Japanese yen has been on an uptrend. Okay, so the primary trend would be definitively supportive of not simply a bounce, but maybe something more significant. What is very interesting about this pair is that when the rallies come, they can be very sharp. You can see like this rally, all of a sudden, like boom, we go up in a very big way. And some of the previous rallies as well, they have happened very quickly, like super strong, very aggressive when the bulls really get to action. You could make a case that looking historically, the bulls have been more aggressive than the bears. You can see that as an example, the recent move here, the bulls are just ballistic, and then the bears spend a much longer time correcting. So if I was, if I put myself in the mind of a bull trading this chart, then I would feel more comfortable entering, a more meaningful position here due to the way it behaves. But if I'm a bear, this is more scary because it's been far more dangerous to be a bear than to be a bull due to, the multiple instances in which the bulls just show no mercy. Because if you are a bear and let's say you're essentially, shorting the Japanese yen, then and you are waiting for like a pullback to get out, then you didn't get it. Like here you just get shredded, here you get just decimated. Here, let's say that you are, short here, and then, the bulls just eviscerate all the gains you made. So yeah. Definitively, primarily being favorable here for the bulls. So yeah, looking long term, years into the future, I think that we need to give the primary trend its due. There's a high probability that the Japanese yen will strengthen vis-a-vis the Mexican peso. Of course, if we for some reason were to get a break of the 200-week moving average, that would be clearly a very bearish message. But we need to just take the data as we have it. Looking at the shorter time frame, I also think that, given that we are so close here to that key support level, and we have seen this substantial pullback, we are oversold and, well, relatively speaking, oversold due to, how it behaves. Then that also supports, a thesis that we are going to see strengthening of the Japanese yen. Okay. In order to get, full access to the research, you just go here, and one of the great additions is that you get these investing courses and seminars as a part of the package. So the value here is pretty spectacular. I do have a nice mix of people who are subscribers, and looking longer term, I definitely are considering ways in which it can be also more social between the subscribers, because there's a lot of networking opportunities that could benefit all the subscribers. Yeah. Okay. So of course, let the trend be your friend, but always be very aware that there are trends across different time frames. So and if find the time frame that fits your personality the best, and then trade that trend. Because that is like a key thing that people miss when they talk about letting the trend be your friend, is that people have very different time frames.